Hello, ladies and gentlemen. We will give you some portfolio updates and what we're seeing with the market as a whole. Today, today is Tuesday, March 15th. If you have been watching us for a few weeks now, you know I entered a pretty massive position in Zim, which before earnings, which was last Monday, I put the position on. I've sold pretty much the entire position starting the past 2 days, or yesterday and Friday. I still have a few contracts, not too many though, just there was some better buying opportunities like GME. Justin, we have been hammering down on GME for a while. We have only had, well, Justin has shares. I have a lot of options on GME that, I mean, I've just cratered to say the least. We are down a lot of money, but I picked up a lot of new contracts as they're just getting dirt cheap for they're just asking me to buy them.
Yeah, I can't afford not to buy them. I can't afford to buy them either. But anyways, yeah, no, it's So I think back to the VW short squeeze, and I will note that when that happened, there was a massive dip right before the rip. So curious to see what happens on that front. Curious to see how Jamie plays out. Although I will say for myself, next week I'm going to take. I'll probably reevaluate my April positions, and that's when I'll probably start rolling. Maybe June. We'll see what happens on that front. But as far as the market goes in general, choppy. I mean, again, Josh, you're very much the market guy. That is not my bag. But I'm very curious to see what happens with nickel when it resumes trading tomorrow, I believe. And
Yep.
it's the 16th, so it'd be early in the morning, London time. So what is that, like 1 a.m., 2 a.m. Eastern, Central?
Something like that.
Early
Well,
morning,
just
very early morning.
well, if you didn't watch our video, yesterday, which will be today. If you don't watch our video today, Tuesday, March 15th, then basically what we were saying is JP Morgan is sitting on a fat bag because this Chinese hedge fund that was short like 150,000 tons of nickel said, I'm not selling. My counterparty's JP Morgan. You can eat shit, JP Morgan. You're on for the hook.
Yeah, no, it wasn't so much selling. That he didn't want to close his position. I think he even wanted to
He said,
double
I'm not selling.
down.
And they're going to go
Yeah.
bust, and then that just trickles up. So that now JP Morgan's going to be sitting on 150,000 tons of a nickel short. Trading resumes Wednesday. All these hedge fund buddies are going to say, okay, well, JP Morgan, you are about to eat a sack. And they're probably gonna short squeeze the bejeebas out of JP Morgan. Will that trickle into GME? I happen to think so, but we also have our confirmation biased, which skews everything to make it bullish.
Yeah, well, yeah, exactly. Of course. What do you mean it's dropped by 50%? Of course it's bullish. What a stupid question. Yeah. What I would say is I think anything that introduces complex or anything that destabilizes I guess stabilizes the word, the system, I think is inherently in the best interest of or whatever stocks are being suppressed. GME is the big one because I suspect the various, ways, modus operandi that they're being suppressed is they I think these systems are very complex and don't do well with having added complexity shot into it. In other words, it's not simple, and if it's not simple, that means that it's not going to be anti-fragile. So I would assume it can be
And that's
stabilized
gonna
easily.
it's just because all we talk about is counterparty risk and collateral. If JP Morgan starts to take a hit, all other dealers are going to say, hey, we see what's happening here. We're going to ramp up margin requirements. We're not going to let you guys leverage up 200 to 1 anymore, even though I know we're besties, but that's just look at what happened to JP Morgan. We can't have the same thing happen to us. Therefore, this could trickle into the broader market. And I think if, let's say, nickel does squeeze massively, let's say it opens up at 50,000 in a week, it goes to 150, 200,000. That is going to, I think, start some ripples on these short GMEs playbooks.
Yeah, but didn't you see? Wasn't there an article coming out that LME was proposing rules saying that metals would only go up by 15% and nickel could only go up by 5%?
If they're just changing the rules like this, what will they do if GME starts to take off? I mean, it's going to be much harder to hold through the rip of GME than what's happening right now because we're all used to diamond handed through the pain. But what happens when every single day they force close a position, then they like trading closes for 10 days? I mean, every single shenanigan in the book that you could imagine will happen because
Yeah.
this is not what they do not want GME squeezing.
Yeah, it is an existential threat. In other words, it's something that can destroy the entire system. Or from their perspective, it can destroy the entire system. From another perspective, you could say it'll purge the corruption from the system. But not to get caught on semantics. I don't know. Like it gets back. I think we mentioned this in the other video last night. Is that from J.P. Morgan's perspective, they want to be theoretically neutral. So they might be short to Comex, they might be short to LME, whatever, right? But if they're long someone else, like the guy in China, because the guy in China's short, like that's what's going to happen. And so if that counterparty, the guy in China blows up, well, then all of a sudden JP Morgan, they're not balanced. They've got to go through and deal with whatever. And this gets back into what they might do. Yeah, they can, shut down, they could turn off the buy button and do a bunch of other things. But at the end of the day, if people are still going to demand, if people will demand delivery of the underlying and say like, listen, I don't want to be cash settled, give me the underlying, and there's not enough underlying, that's a really interesting question, because either they're going to have to raise the price in order to knock enough nickel loose out of the market at whatever the price is to make it work, or they're going to have to cash settle and declare a force majeure. If they declare a force majeure and cash settle contracts against people's will, this would be like forcing closing a position. They're going to lose their credibility. In the sense, okay, well, listen, why on earth would I do business with you, Mr. LME, as a central counterparty, or COMEX, or whoever else? Because, like, if I'm Tesla or Apple, whatever, I need the actual, like, metal for my batteries or whatever, right? I don't actually need cash. I want to give you cash because I need the stuff. So I don't actually know how that's going to play out, Josh. But again, I see it as a very interesting mind game, because the easiest short-term answer for them to be to force cash settle under a force majeure. But if that destroys their credibility, who else would do business with them?
And what will the public's response be? Because, I mean, there's so many caveats and so many cross currents that we don't know what's going to happen. We're just trying to think it through before it happens and see the trickle down effects. Because once I really did start to see this, I haven't really looked at my portfolio much today, but GME's probably down if I had to take a guess. And I'm going to probably sell the rest of my Zim. I made some nice profits on that, so I can deploy another, say, decent sum. I could maybe get another 10, 20 contracts of long dated Jan 2023 950 GME calls that I'm just going to sit on and put some more delta pressure on them. I would love to pick up some more cheap calls if they get there. Some other things that I'm really looking at is Chinese tech. This is something that's on my watch list. I'm not going to pull a trigger yet, but something like Alibaba's just getting cratered. I think it's down to like 70 something dollars. And I would love to pick up some super cheap growth Chinese stock. Like they're trading at what, like 8-9 times earnings. If we see them drop down another 20-30% and they're at 5.4 PE and they're growing at 30% a year, I would be very interested in putting on a pretty massive position size. But with the Dow or S&P officially hit a bear market yesterday. I think it was down. I don't know what the qualifications were, but I saw it from Bloomberg, and who knows what's going to happen. Tapering's going to continue. They're going to raise rates probably. Who knows? The way dealers are positioned, I would expect some sort of snapback rally at some point, but who knows when. We could drop another 30 points before that. And what will the government's response be? Will the Fed reverse course and start QE? Will the Fed come out with new stimulus to prop up the market? I don't know. I do think there'll probably be a recession in the short term at some point in the next like 1 to 3 years. Just by the way, 2s 10s looks like they're gonna invert, which there's been a 100% chance so far. The 2s 10s invert, then there's been a recession every single time. I don't know what's gonna happen, but that's what I'm really looking at right now.
Yeah, like the Chinese equities are definitely not for me. I don't care if they're cheap. I just want nothing to do with them. So, but for those who do, have at it. Not for me. I will say the other thing we were talking just before we went online here, was it looked like the Saudis are starting to make chatter about accepting renminbi, or the Chinese currency, as a supplement for oil. And that is very interesting, because again, like, governments just don't chatter about stuff, or I would argue, this is stuff that's been planned out a long time ago. And this is kind of how they, I don't know, what would be the word, foreplay is what's going on, right? Financial foreplay is what's going on the geopolitical level, from my perspective. But anyways, again, I don't know how that's going to pan out, how that's going to, or how that will pan out, and how that will come to affect it. But I'm curious to see where it goes.
Yeah, I think that would be pretty interesting. I would say if I was Saudi Arabian, I would not like what the Western nations are doing with their ESG movements, because it's just they're an oil producing nation. So I would not be looking at what our global elites are doing and being all hooray for it. I would expect them at some point to accept other currencies for their oil. I don't know when, or if they do accept the yuan or renminbi, whatever they decide, but I would not be too surprised if it does happen.
Yeah, and the other thing too is that, like, look back to what happened with Russia, like the West, intentionally or not, that I do not know. I've got my own views, but I'll keep them to myself right now. When they when they sanctioned central bank reserve assets, like that was a shot. And now the attitude is you're the Saudis, again, I don't know what goes on in the murky depths of geopolitics, but at the very, very surface level, you can say, or someone could with Saudi say, like, look, like, we have no problem paying you in dollars, but here's the problem. You saw what the U.S. did to Russia with the sanctioning central bank reserve assets. Listen, like, we're not necessarily antagonistic to the United States, nor are we particularly the best friend. We just want to have our own little corner of the world and do whatever. But we don't want our reserves in dollars to be seized just because the U.S. is, having a moment or whatever, right? So this is the type of thing. There's probably so much more lurking beneath the surface, but it's just on the surface level. I could see that conversation going on.
Yeah. That's kind of all we're seeing right now. We thank you guys for watching, and we will see you in the next one.
Take care, Joe.